Greetings, Opal Universe. This is Professor Tommy Halstead coming to you with the recap for Decision 2 in June of 2025. So say hello to your future self if you're watching this later. Here comes, let's see. What we're going to do this time, we're going to go quickly through the visuals so you can see them. And I'm going to do a lot of commentary on the visuals you already know we're looking at, like lost order over inventory, etc. Okay, we're going to start like we usually do with our rankings. What happened? Red maintained their lead. And remember, the top is six, they've got eight. If they were number one across here, they'd be the unchallenged leaders with one everywhere. But we've got a couple of ones in CO2, still an important morale for blue team. And none of the teams switched places, although blue dropped significantly in image and yellow maintained their stance in image, but dropped quite a bit in low cost. This is reflected in the standings, and we'll hop over there. But I just wanted to remind everyone that these are pretty relative, although the spreads are close. 8, 12, and 16 shows there's clear separation now between the teams because blue got pulled down in image, and we'll have to look at that and see why. So the first thing when we look at this for decision two is we can remember all three teams did fantastic in image last time, but did not do very well in family. Everybody else gets eaten in low cost and in eco. Same thing, we still got eaten. Red did a little better in not losing as much blood in eco, and also blue and red surprisingly did quite a bit better in low cost. They made some of the corrections they need to, although yellow got absolutely killed. Their excellent performance and image got wiped out by this nasty little low cost, which can really bite you because it's not a fast grower, but it has very specific needs, and you got to watch the financials. When you see a chip like this, where blue just got destroyed in something they were dominant in last time, what's the first thing you think of when you look at the financials? Yeah, me too. Price, right? What's going on with price? What did they do to destroy their market? Let's go look briefly at image. And I haven't seen this yet. There we go. Look at this. Look at the price here. 131.40, 125. Yellow's way up there. Low cost leader. Blue, in an attempt to probably help their EBIT, destroyed it because look what happened to revenues. They spent a lot of money on marketing, and we'll have to look at LOI too. Were they able to produce those? But this tells most of the story. Remember, elasticity of demand is very elastic in this sim. Elastic means things move a lot when other things don't. So price elasticity of demand is demand. Some people get inelastic mixed up. Elasticity of demand means demand is really elastic for small price increases. So you go way above 125 to 140 and your demand's going to drop boing, all the way down to the floor. And let's see what's happening with revenue here. Well, yeah, look, 847. So blue got totally killed in revenue by raising the price this much, and yet keeping the expense going, so their EBIT must have been destroyed. Yeah, look at their EBIT. They went from positive and giant financially to negative because they kept investing in marketing but raised the price too high in an attempt to take profit a little bit from the revenue, but this elasticity just killed them. You can't have this big of a relative difference between prices and gain market share. You've got to stay close when the elasticity means a dollar or two in price makes a huge difference, or 1,000 or 1,000,000 or whatever these units are. So, what's the other thing? Well, everybody got absolutely killed in eco. Let's go look at eco and see what's going on with what everybody's trying to do in eco. Now, yellow did worse, and look at their price. So the revenue, what's happening with the revenue? Yeah, the revenue isn't too bad, but red, I think, did better in revenue, didn't they? Yeah, see, look at red. Red did did some better things in revenue here, but jumping into positive territory in EBIT is very, very hard in eco. It's just deadly in terms of look at the differences in demand. So red is relatively better, but they haven't gotten into positive EBIT, even though the profit is much better than yellow, who's the loss leader there. So we looked at low costs. Now the real story is in family, where we said, look, everybody's dying in family. You have to do some work there because it's a really profitable line. So what happened? Wow, this is what happened. We were close in price, except Yellow and family said, look, we're going to go grab this share and we're going to be a low cost leader. So what happened to them in revenue? Bang, the revenue leader there. So Yellow is now leading and made up for the differences in family, even though they got absolutely killed in low costs. They did really well in family and in image. So a lot of hats off to Yellow. Blue, of course, is still a solid second and did great, except they just got absolutely killed in image with that pricing decision. Had you kept that, you would have been breathing down Red's neck. And Yellow is already breathing down your neck because of doing so well in image and also in family. What really killed Yellow is that the investment in low cost, as we looked at, was just killer for poor Yellow. Even though they had great pricing, look at what's going on with engineering appeal here. They're completely missing the boat with the white line in terms of what low cost actually wants. So remember, next time we look at family, blue needs to take a lesson from red and yellow in terms of the pricing is not bad. The revenue is dead. So you have to look at lost orders over inventory when you see that it's not that far off in price. I mean, it's far off from yellow, of course. That's 10 points is huge with this elasticity. So all right, what haven't we looked at? Looked at eco, at image. All right, you've got enough to take shots of this. Let's head on over to the individual charts. Here we have our absolute favorite of all our indicators that really, really predicts better than anything else other than price what's going to happen with your EBIT, and that is what's going on with your orders, your supplies, and your demand. Remember, lost orders over inventory, this is flipped. So this is inventory up here, and that's the lowest lost orders. Anytime you have a ratio like that on a graph, it switches the denominator with the numerator. Data visualization. Okay, so our zero line is red still doing great, and they're the best in low cost. I mean, they are. I mean, yellow's being destroyed in low cost. So the interesting thing is that they had a huge amount of inventory and they broomed it out, but killed their EBIT. The revenue wasn't bad. They dropped their price and they dumped that inventory on the market. What happened to blue is blue was headed towards good territory and low cost, but they overshot and built inventory. So look at that swing. It's from having a huge number of lost orders with a lot of orders and not enough sales to producing plenty, but then building inventory. So it's definitely a kind of a trade-off game when you go back and do that. But let's look at family where blue had a issue with inventory, right? Yeah, blue is building. They had a trend of going along with zero, matching supply and demand, but suddenly they made a lot that they didn't sell in market, and so they built inventory, as did red. Although in family, red was building they started a little flywheel there, and they were building profitable inventory. Yellow is not better or worse. They just kept it the same, didn't change their sliders that much. It's not actually the sliders, it's the production on this, the plant investment and your estimate of depreciation added back into your CapEx, which is controlled by the sliders then. But so if blue could get rid of this inventory, watching their pricing in family, they can recover in family. Let's look at eco, where everybody was killed. Yellow, wow. Hats off to yellow. They did pretty good. Oh no, the zero's down here. I was just about to say they're very straight, but they're way above inventory. They still have a lot of inventory there. And blue is building inventory like crazy. What's going on with blue and eco? Yeah, we're definitely not marketing eco the way that we should be, or when we're able to make it. And red's problem is the one we never want to see in eco, which is lost orders. They did great marketing, but didn't make enough on the eco line. And finally, our old one where everybody did great, but blue crashed and burned. What happened to blue here? They built a huge amount of inventory and image, which is very, very unusual and very, very unusual because they've got their act together in terms of building and making, producing, but the marketing side is an issue. Zero's way down here, so there's still a lot of inventory going on with yellow, but they're going in the right direction. And red is fairly flat, so it looks like in image yellow and red both don't look too bad. What are the? Oh yeah, okay. So red is barely above break even. Yellow's doing great in terms of profitability. So we do have those lost orders in red that are killing them, but yellow is not so bad. They did really well. It's blue that really got destroyed their financials with this inventory buildup in image. And we looked at the reasons for that. So further comment, let's go over and take a look at the our famous white lines. All right, let's start with low cost. Get this image out of the way. And our red team. You can see red team is really getting good at matching the demands in terms of this is low cost, right? Yeah, in terms of consumption and model numbers and novelty, which are important. There's still a little gap going on here between the white line, but they're tracking pretty closely in terms of, where you want to increase or decrease to hit that white line. And remember, if you're crashing and burning somewhere, especially like yellow in low cost, you're going to want to really watch this white line because you can make a course correction just by matching your customer demand better. But you can't, if you're having a price issue, you can't just work your way out, with these little pricing boxes here. You can't, when you're budgeting, you can't work your way out of a problem if you've got a big pricing gap. That's not, it doesn't matter how well you're matching the demand because everybody demands low cost in terms of the value chain, not just the proposition, but so let's look at family with red. Red did great in family. They had a great match and they had great financials. Eco, nobody did well with. So everybody's trying hard. They're investing in those areas and CapEx is going up. Image, I'd like to see what's going on with blue here. Let's see. Red it's marginally doing okay. They did a lot better last time in image. So they're following pretty closely, except for these bulges where one's going down, the other's going up. They're still following pretty closely. Crossed over, but not quite as much between model numbers. Model numbers are always tricky. Consumption, again, is expensive CapEx-wise. So blue is not doing too bad in low cost. They're in positive territory. They were surprisingly not doing very well in family in terms of figuring out what's going on with demand, and consumption just got absolutely destroyed. There's a huge amount of money in CapEx because, consumption is your fuel economy and family cares about it, but not that much. So the expenditure and the CapEx of production, which is tragic because look at how well they did in all the other ones. So you just got to watch that consumption slider. And it is also the most difficult one because you're trying to, save, more consumption means better gas or less or better gas mileage as you spend on less consumption. So it's kind of double negative. Let's see. How did blue do? Blue didn't do. Nobody did great in eco, so it's we're not expecting fantastic results there, even if because of the pricing and the investment of supply and demand, and eco is just, it's not a grower until another decision or two from now. Image didn't Bill get, yeah, Blue got killed in Image, didn't they? Oh yeah, I remember had high marketing investment, and then they're above the line here, which isn't criminal, but it's going to kill you if you're not careful in price and supply and demand and how you're building inventory. So we'd have to look at the individual budgets on the loss orders over inventory for that. Let us see what's going on with yellow. Remember to take some shots, screenshots of these white lines, because they'll help you with your final paper. And they'll also see what happened in terms of those initial decisions where you hardly did anything to the later ones. You can see yellow hardly did anything except for consumption here that they absolutely nailed. But their problems were really financial in low cost. They weren't as much customer and demand. They were on the finance side of the budget as well as pricing, but they did good in family. Let's look at family. I think they were best or else tied with red for family. That's not too bad for yellow. This is a pretty good match. It looks like they're going up when they should be going down, but not by a whole lot. When it's close like this is good. Number of models is always tough. It's really hard to figure out because it increases CapEx so much, but if you're too low, the choices go down and you get killed by your competitor if they have better model coverage. Red didn't do too bad there. Let's see. Image. This blue is actually the story here, but yellow did really good in image. Yeah, this is kind of a great profile for image here. It's a little better to be below than above the line. But in any case, they're really, other than consumption again, which is something that's not that valued by, image, but this is image, right? Yeah, this is image. It's not that valued by image, but look at how low that is. That's pretty amazing. They could probably bring that up a tiny bit, but not a lot. You're not expecting a lot of efficiency in a Maserati, fuel efficiency. Well, maybe today you are. So we saw lost orders over inventory. I wonder what's going on with blue and image. Let's go back to the blue team and look at image and financials just for the heck of it, because I was shocked at blue, other than the pricing, that blue got so destroyed. Again, decision 3, blue's got to look at family and image, the big cost producers, because they went from highly profitable down to a lot of problems in their 2 flagships with family and image. And yellow did great in family and image, and if yellow can just back off on low cost, get the prices right, and blue can be careful of not pricing themselves out of the market in image. Everything else can stay the same. You don't have to go crazy on your sliders and all that. Just get the price in line and you'll come right back. Dear blue. Red, nobody can say anything. They're doing fantastic. They're doing great. So let us. All right, thank you. There's your standings and there's your images to take pictures of for your final presentations and your slides. And we'll see you back in the discussions.